So just seconds ago, the Federal Reserve decided to keep interest rates unchanged. This is the fifth consecutive time board members with the central bank have voted to pause interest rates. But today's decision was far from a foregone conclusion. Despite the labor market holding steady, renewed tensions over the war with Iran are raising energy prices and reigniting inflation concerns.
We will hear from Fed Chairman Kevin Warsh in about 30 minutes about this decision in his just second meeting as head of the central bank. NBC News business and data correspondent Brian Cheung is at the Federal Reserve headquarters in Washington, D.C. today, standing by for the chairman's remarks. Brian, what are your initial takeaways about the decision? Was it a unanimous vote, and what does it mean for our wallets?
Yeah, Kate, again, just to kind of rehash the top lines here, the Federal Reserve opting to hold interest rates steady as they've been doing throughout the entirety of 2026, the fifth straight meeting that they have done so. But this was not a unanimous decision, to your question. There were three policymakers that voted against this decision to hold interest rates steady. There were three Federal Reserve Bank presidents that opted and wanted to vote for a quarter-point interest rate hike in this meeting. That was the reason why, as we've been talking about going into this afternoon's decision, whether or not there could be even the option on the table for a surprise interest rate hike, even though markets were still largely expecting them to hold pat on interest rates. This underscores the growing fractions that are inside the Federal Reserve, what current Fed Chair Kevin Warsh describes as a family fight. We are seeing that now in full play, even though it was a 9-3 vote. And of course, the question here is, what is the impact of the war with Iran on the U.S. economy? If that raises prices because of higher oil costs, because of higher gas and diesel costs, well, does that mean that the Federal Reserve will have to tamp down on inflation by using their usual playbook of raising interest rates? That's going to be something that we're looking forward to in that press conference, which will begin in about a half hour. But again, the Federal Reserve opting to hold interest rates steady for the fifth straight time.
You bring me, Brian, to our next question, because the president did nominate Warsh after repeatedly criticizing former Fed Chair Jerome Powell after his board did not more kind of aggressively cut rates. Yep. A rate hike appears to be something the president would be strongly opposed to. But some experts are expecting a potential rate hike with the inflation that we have been seeing because of the war, as you mentioned. So how is Warsh going to square this?
Yeah, and that's something that could be a real challenge for him, because when we talk about what the markets are expecting, if you go all the way out to the end of this year, which is vastly approaching, but you'll see that over about 90% of Wall Street bets are pricing in a chance of at least one interest rate hike by the time we flip the calendar over to 2027. There are very low odds of any interest rate cuts over that period of time for exactly the reason that we're just talking about, because of the inflationary pressures of this war and underlying inflation. We're in over 60 months of consecutive reads on inflation that are above the Federal Reserve's target of 2%. So Kevin Warsh is going to have to, at some point, likely hike interest rates, but that's going to go directly against the person that appointed him into this role, who has, of course, been advocating for lower interest rate hikes. That could be why we're on watch for perhaps a Truth Social post in the coming hours.
All right, Brian Cheung staying there for us, and we'll watch that press conference. Thanks, Brian.
Thanks, Brian.
We thank you for watching, and remember, stay updated on breaking news and top stories on the NBC News app or watch live on our YouTube channel.